Hello everyone, welcome to the Ichimoku daily analysis for the S&P 500 for Tuesday, August the 2nd, 2011. Well, a continuation of the trend to the downside today, and we've had a candle that's made a lower high and a lower low, and an extremely bearish day today. Very large red-bodied candle, denoting the sellers making significant net bearish progress. The market has opened up towards the high and closed down towards the low, which suggests that the sellers have closed this market with very, very strong control, and they've shown very strong commitment to taking this market lower. This market has been so negative that we took out two decent levels of previous support. First one was at 12.75, where the market held up yesterday, and we saw the sellers lose commitment, blown that away very quickly. And the area at 12.65 was blown away in a significant way as well. A swing low down here around 12.57, 12.58 was taken out at the same time. So three important levels of support were really taken out very quickly by this market in one day. So a very, very negative day. Quite often, however, when we do see these very strongly bearish days, we see that the market fails to go on with the move, and with this strong downside momentum that we've had over the previous week or two, the market really does need a bit of rest. So it wouldn't surprise to see the market start to go sideways or perhaps retrace to test this 12.65 area and for it to act as resistance. So we do need to be aware of that. Having said that, however, we don't have any evidence of that happening. So we do have a trend that's down, and we do have a very negative market. The next area of support that the market will be interacting with is 12.46. So that's the next level that we should be looking to hold as support. If we see the market test that in a very negative way, then there isn't any support until 12.32. But there are steps all the way down here of major support levels. So at one of these levels, eventually the market will hold up. And if we do see the sentiment in this market change from negative to positive, then that could be a sign that we will have some sort of retracement. Now, that's not saying that the market will retrace all the way back up to where this downtrend started. We should be looking to some percentage retracement of this first time frame downswing. And if we look at this downswing compared to this previous upswing here, where the market traded up through the cloud, we've already matched that, and we're just lower than the magnitude of that previous upswing. In Ichimoku charts terms, the market is trading down below the cloud, and we had the bearish breakout below the cloud. Not a terribly bearish breakout previously. We did see the sellers lose commitment, so it wasn't a strong sell signal. We have had the confirmation now of that bearish breakout with today's candle, obviously. The market is also trading down below the Tenkan-sen and Kijun-sen, so we have a bearish market in the long-term time frame by trading below the cloud, in the medium-term time frame by trading below the Kijun-sen, the pink line, and the fast-term time frame by trading down below the green line, the Tenkan-sen. We have had a crossover of the Tenkan-sen below the Kijun-sen, and that's a bearish signal in Ichimoku charts terms, and that occurred within the cloud, so it's only a neutral signal. And we also have the Chikias band now trading down below the corresponding price action, which means that that's confirming the negativity that we're seeing in big picture terms in the market, this overall negativity. So there is a good chance that we will see the market test down to this 12.46 region, and we do need to watch how the market reacts down around that level. As I've said, if we do see a breakdown below there in a bearish way, then 12.32 is the next level of support. To the upside, if we do see the market trade higher, then we do have strong resistance overhead, and we know that support can turn into resistance. So 12.65, 12.75, and then the area within this yellow zone that we highlighted from previous resistance is an area where we could see the market hold up. We certainly do have the cloud up above there and the round number 1300, but really we should be focusing to the downside and watch how the market reacts to the low and then down to 12.46. Now, just taking a look at the bigger picture, we may have a significant event in the making here. This is the weekly chart, and the final candle here is not complete, so we do need to be mindful of that. But we do have what looks like a head and shoulders pattern that's formed. We have a left shoulder here, a head, little complex head with another slightly smaller peak just before the major peak here, and a right shoulder. So a left shoulder ahead, a right shoulder, and we've drawn the neckline between the two shoulders here. And the market has broken out to the downside below the neckline, so that is quite significant. It is a bearish breakout as well, and what we want to see is the market close down below there for completion of the pattern. A close down below there would be a completion. I like to see a bearish close in this situation for a better confirmation of the breakout, and if the market stays as bearish as it is by the end of the week, then that will be potentially fairly significant for this breakout below the head and shoulders pattern. We are able to draw a target. The target is the height of the top of the head, or the peak in the head, down to the neckline projected down from the breakout. So if this market does go on with this close down below, then we do have a target down around 1150. We have to be mindful though that we do have very strong support below here. So we do have support at this 1219 level, at the 1200 level, round number that's within the cloud, and certainly at the bottom of the cloud. So very, very strong support. Not likely that the market will meet its target terribly quickly, and may not meet its target at all from this breakout, because we do have such strong support down below. But we do need to watch this market coming into the end of the trading week. If we see the market close down in a bearish way below the neckline, that will be completion of this head and shoulders pattern. However, we can't preempt that. If the market does start to rally from here and we fail to see a close below there by the end of the week, that will not be completion of the pattern. A test down below the neckline is not a completion. We do need a close below the pattern. So we do really need to watch that area coming into the close of the week on Friday.